All right, ready to roll. Let's heating up the coffee.
Okay. Hello and welcome to today's live stream. Today we will be demonstrating the Unity Excel trading model. We will be taking trades in the financial markets, and we're looking forward to demonstrating some brand new strategies based on some classic trading ideas, but we've got some brand new strategies. We're going to talk you through them. We're going to hopefully get some trades, and I am looking forward to it. With me this morning, as ever, is Ren Vallow. How are you today, Ren?
Good morning, Mark. Yeah, doing well. I'm really excited about the new models that you put together over the weekend, and yeah, I can't wait to see you demonstrate them.
Okay, yeah. So we had this idea. We were talking about it last week, and we wanted to get some classic trading ideas, some classic day trading in particular, but it doesn't have to be day trading, particularly the mean reversion, because mean reversion happens on every single time frame, from the 1 minute to the 1 hour to the 1 month time frame. So it's completely flexible, and that's the one we're going to have a look at today.
That's one of my favorites.
Yeah, because it always happens, and it depends
Yep.
on your point of view. We often talk about momentum, we often talk about breakouts, but
Yep.
mean reversion happens a lot as well. So we're looking for, particularly the model that we've got here, we're looking for a fairly extreme move in one direction, and we're going to bet against that move. We're going to trade against it, and we are going to see what happens. So we've got the Unity Excel trading model, and I will zoom straight in so you can have a look for those of you watching this both live and on catch up. Here we are. We have the first version of the mean reversion model, and the way that I'm doing mean reversion is I'm using price channels, Donchian channels, however you want to call them, and we are waiting for a spike through the channel. So we make it a new low for long trades or a new high for short trades, and then we're going to enter our trades. So we've got a few different conditions, and I'll talk about those in a moment. So you've been having to play with this model, Ren. Any thoughts? Initial thoughts?
Yeah. So yeah, so far so good. I had a really high win rate yesterday, playing around with it. So I was like, hey, this is really exciting. And I may not have been using it in the traditional sense, but the way I had set it up, it was working like a charm. So I was like, hey, I'm super excited about showing this one. And it's different. Like you said, a lot of people use mean reversion in their trading. So this is going to be a lot of fun for a lot of traders. And I really enjoyed using it. So I'm looking forward to, using it all week this week.
Cool. Yeah, I mean, mean reversions, that's the thing. You've actually hit the nail on the head. For people who like high win rate strategies, which, let's face it, is, I think probably most of us, we want to see our trades going in. And it's almost the opposite, isn't it? For breakout trading, you might have to accept a 30% win rate, or
Right.
maybe 30 to 40% win rate for breakout. But the flip side of that, the mean reversions, you can hope to get 70, 80%, even higher than that for some
Yeah.
setups, which is nice. It's nice to see those winning trades. On the other hand, you've got to take the occasional large loss, but
Right.
that's the profile. That's what you
Yeah.
get from this type of trading.
And that's something you brought up that's really important here. So while I did, the mean reversion has a high win rate, they do have potential large losses because the markets can go into a trending mode while you're looking
Mm.
for a mean reversion. But what's great about having this model is our risk management has been done for us, right? So we're not going to get emotional. We're going to let the risk management take over and close the trade when it's supposed to be closed. And I think that's the problem with mean reversion with most people. You get a high win rate, but then you get that large loss that wipes out your winnings. And in this case, using a model that automatically takes care of that for you, gets the emotion out of it, so you can actually trade a mean reversion strategy with confidence.
Yeah, yeah,
And I like
agree.
that. Yeah.
Yeah, it's the discipline, isn't it? I mean, this is an algorithmic um, model, an algorithmic way of trading. So you would backtest the strategy, would have a robustly tested, as robust as we can get, because we're always using historical data for our backtesting, and then we can apply that and get it to reproduce exactly that going forward. First of
Yep.
all, forward testing and then trading it live. So yeah, it's going to stick to profit targets and stop losses, and we're going to see exactly what we had in the back test in the forward test, and it's all in Excel. So
Yep.
let's have a quick look. Let's go back to the model. So I'm going to zoom in here, and you can see here, so this is a sample of the Unity Excel trading model. We're using the euro US dollar, which is highly liquid, very low spreads, really good market to trade. You can set your position size, you can set your time frame, and if I drop down the menu here, I realize you can't see it on the screen, but you've got all the different time frames that are available in MT5, MetaTrader 5. So that's 1 minute, 2, 3, 4, 5, 6, 10 minutes, and there's lots of different intraday and daily time frames. So we can select the order type, and you can select the amount of data, which is significant because you want more data for backtesting and less data for trading. So the strategy, why it's different to the ones that we have been showing for ages. We've had strategy 1 and strategy 2, which had elements of momentum and mean reversion in them, but here we have a full mean reversion strategy. So I'm using price channels. So I've set up a 100 period price channel, which means that we're going to have to make a 100 period new high or new low to trigger the entry. We're trading on the 1 minute time frame. We've got an RSI filter, which I'll talk about in just a moment, and we have an option to say we don't want to just pierce this price channel, this Donchian channel. We want to show a bounce. So we want to show a close that is closed back above the level that was our previous high or low, which is the price channel. So I don't know if that was clear, Ren. Maybe you can explain it a bit further, but the idea of this close was we want to see a bounce. We want to see it hitting support or resistance and then bouncing back into the trading range.
Exactly. It's a traditional looking for that pullback, and then you from the actual mean reversion. So we're looking for that to take place. Like we're starting to go with the trend, even though we've had the mean reversion, and now we're going to go with the trade. Hopefully, that's the idea behind it, and that does get a really high win rate, which you're showing. You're reflecting that in this spreadsheet at like an 80%, 75% win rate. Which
Yeah,
is
I mean, we always historically we look at the 1 minute time frame or even faster on our live streams because we want to have some trade. So I'm hoping we're going to get some trade examples. I'll just demonstrate to the people watching this. We've got live data streaming into the model. If I can go down here, you see we have the latest price data going into the model. Let's just scroll out a little bit.
And while you're doing that, Mark, the other thing I've had problems with using mean reversion, trading it by hand as just a day trader, my patience level is just not there. So I'll get this trade that goes extreme in one direction. So like for instance, it's moved too far, what I would think is too far in one direction. Maybe it has like a 3 standard deviation move in a short amount of time. So I go in, I jump on the trade because I'm excited. Like I never wait for that mean reversion to start. Like it's hard for me to do that. Even though I know that that's the rules of this type of trade, I'll tend to get impatient and enter the trade early, which then the trade continues to move in the direction of the trend that it's moving and causes a loss right away. So it's not just the closing of these trades that's difficult, it's the entry, because you have to be patient enough to wait for the pullback to have taken place. To start happening.
That's absolutely right, isn't it? Yeah. I mean, it's not an easy way to trade, but there's no easy ways to trade, is there?
Right.
You've got to be brave and jump in and assume that this elastic band, which is pulling the markets, we've got a stretching in one direction. Once it's stretched far enough, the band is going to pull tight again, and it will come back to somewhere in the trading range. And that's what we've just got to assume is going to happen again.
Yeah. And I
But
do see
yeah,
this in
you're
the
right. It
currency
is.
market.
It's difficult
Ah,
strategy to trade, especially on this short time frame. We're looking at the 1 minute time frame here.
yep.
Um, I've tested it on the 15 minute. I'm not sure what time frame you were testing, and we had some really good results on the 15
Yes.
minute time frame.
Yep.
And the good thing about that is you can trade it any time of day, whenever we think we're going to have better mean reversion trades. So I would say out of the busiest times, looking at on the flip side, the times we're most likely to get breakouts that will stick are going to be in the busiest times. So the London Open, that short 2 or 3 hour period there. And the same thing when we have New York and Chicago coming in um, at 8, 9 o'clock a.m. Eastern time.
Yep. Yeah, I agree. I totally agree. Yeah. So this makes trading a very difficult strategy that has a high win rate possible, I think.
Yeah, yeah, exactly. I mean, that's what we want. We want not only a strategy that's profitable, that's got a statistical chance of reproducing the backtesting results going forward. We want a strategy that we can actually trade. So we need both parts of the equation.
Yeah, and I also tend to see that these trades have a little bit larger, they get larger returns on them. So that is good too. Some of our breakout strategies that we traditionally go for, they have a smaller win rate. They have a good win rate, smaller win rate, but it's like there's smaller profits too. So
Mm,
it's harder to like with commission costs and those things. This trade doesn't trade as often, so your commission costs are very low. And when you do have a winner, it's usually a good one. So
yeah, yeah, that's the thing. We've been talking about this a lot, haven't we? Average trade size. It's so important on the intraday time frames. Getting that average trade size high enough to pay for the rest of it, because it's going to
yep,
have to cope with the losing trades. It's going to have to cope with the slippage. It's going to
yep.
have to cope with the cost of trading that your broker, the commissions that your broker charges. So that average trade size is a key metric.
It is. It is. And like you said, I did try the 15-minute time frame. Did really well with that.
Mm.
And even at the 1 minute, I found quite a few variations, 75 to 80% win
Mm.
rates, which I was that's what I ran last night. Actually, I was running those 1 minutes just to test, get ready for today.
Yeah, and see what it does. Great. So to give you a bit of an idea, people watching, the mean reversion model that we're talking about here, we've got actually two new versions of the Unity trading model, and I'm just going to show you. We've got Zoom. I'm just going to show you what it looks like. Here we go. So you can see here what it now looks like, and on the Trade Informed website we have this mean reversion model, which I'm hovering over at the moment, and the opening range breakout model, which we're going to feature in an upcoming live stream. So we've got these two new versions. All the Unity Excel models work in exactly the same way, but these ones, I've got some classic day trading strategies, in fact classic trading strategies that you can use straight out of the box.
Yeah, it's really helpful too, for especially for people who are just getting used to putting in indicators into Excel, to have a couple of these models in their toolkit so they can see how it's done, and then they can add whatever other indicators they want to add to it. It's fairly simple to do, but if you've never seen it before, it's worth having a couple models in your toolkit.
Yeah, exactly. Yeah. Um, I said I was going to talk about, we've got the RSI in this
Yes,
strategy, a classic
my favorite.
technical indicator. The way that I'm using it, at least in the first instant, is to say we don't want the market too oversold. And right,
Up
just
there's
waiting
the
for my
morning bell.
opening bell.
Yep.
Stocks are open. Let's have a quick look. Actually, I'll interrupt myself and let's have a quick look at what is going on. So we've got the MetaTrader 5 terminal here, zoomed in on that. This is how we are accessing the financial markets. We're going to get price data directly from an MT5 account. So you have to have the terminal open, but that's all. You can view whatever markets you like on it. We're streaming the prices directly from the server. It's all done very smoothly. You don't even have to think about that side of it. Everything is going into Excel, including the trade orders coming to and from Excel. So let's have a look. See if we've got any price data coming in. Got the NASDAQ here, which is always a good bellwether for what is going on. So initial
Yep.
move
Yep.
is to the upside.
Yep.
It's going to
It
be
looks like
pushing
it.
at those recent highs. So NASDAQ has staged a pretty good recovery, hasn't it?
Yeah, it has. It
From
really
those
has.
lows, that's up 7.5% from the
Yep.
lows that we saw at the end of December. And in fact, we saw them again at the start of January. And if you'd have asked me at that time, I'd have been pretty convinced we'd have hit new lows pretty soon, but we didn't. We've
Yeah.
recovered very strongly. We've had CPI data and we're up 7.5%.
Yeah, we definitely we saw two lows touching, like we've got here two lower lows, and then it's recovered from there. It's incredible. I
Yeah,
wasn't expecting that either. I was not expecting that. The support really did build up at the end of December.
yeah, it did. Yeah. So, yeah, NASDAQ is a good bellwether. It shows us where risk appetite is. Still in the market currently as we speak. Another proxy for risk appetite, Aussie US dollar here, again pointing upwards. We've had a lot of strength in whatever markets you're on. I'm just selecting a few here. We've got the French index here, which has been pretty strong. See
Yeah,
here from
wow.
the lows, we actually hit the lows back in September, and it's up what 20, maybe 24% since then. Well, we've got to have a quick look. Let's have a look at
Wow.
Bitcoin. So
Wow.
amazingly, after FTX and all that
Phew.
business, so yeah, we're up nearly 30% in Bitcoin. I imagine something pretty similar in Ether. Let's have
Yeah.
another look. All of these markets are available. The only limiting factor is the markets that your broker offers. MT5 is non-broker specific. You can get it from wherever you happen to be based in the world. You can find a broker that uses MT5. We're not affiliated with them. We are just using their pretty good, pretty advanced way of connecting directly to their servers. You've spoken about it many times, Ren. It is a good system, and we're just piggybacking on that, bringing the
Yes.
data into Excel so we can use Excel to do the calculations, give you, the user, a nice, easy way to control the strategies, change your indicators, do all that, and also have everything visible in the way that Excel does. And then you can use that to trade.
Exactly, exactly. Now, if your broker doesn't provide the data for you, you can always get a data provider. Like in the US, we have CQG and Rhythmic, which we've talked about many, many times.
Yeah.
And you can buy the data and put it into the MT5 system, which then connects back to your brokerage again. So, like you said, it's pretty much broker independent in that way. Some brokerages don't allow the connection. Like if the bigger houses like TD Ameritrade, they don't have a way to use the MT5 system because they have their own platform like Thinkorswim, which but is not geared towards algorithmic trading like MT5 was designed from the bottom up for algorithmic trading. So that's why we focus on that platform because it makes it easy to get the data back and forth between Excel and the trading platform, and it was designed for this algo trading. That's really
Mm.
why they built it. So it's a big enhancement on MT4, which was probably one of the first platforms out there that allowed like this algo trading for the retail trader. So they've made a lot of enhancements since MT4. MT5 is very robust in this way.
Yeah, yeah, it is. Yeah, thank you for that, Ren. Yeah, it is. It's a really good system. It makes it really easy for us, which means we can pass that on to you if you want to use this system. It works well with Excel. We have a very simple interface. You don't even have to install it on your computer. All it does is it connects. It provides a pipeline between the server, your broker's server, so you can stream in that price data like we're doing at the moment, and then just send out the signal. So if you're having a buy signal, a sell signal, whatever you want to do, you can do that directly from Excel. So anybody watching this live, please feel free to add some comments, ask us any questions, let us know what you think. And if you're not already, there is a link directly below this video on YouTube showing you where you can find out more about the Unity Excel trading model. So we've got this new strategy. I've talked about the filter. We've got the RSI filter. There's loads of different ways to do mean reversion strategies, and we're going to try excuse me, we're going to try some more of them, I'm sure, going forward. The opening range breakout strategy. So we've got that. We're not showing it this week, but it works in exactly the same way as this. What we do, if you're a Forex trader, you'll be very familiar with the idea of say the first couple of hours or the first hour of the London trading session. You look at the highs, you look at the lows, and you wait until the price has broken above or below this range. If you're an ETF, you're a stock trader, you will look at that. Say if you want to look between 9:30 a.m. and 10 a.m., say that first half an hour when all the liquidity is flowing into the market, the price is bouncing around, we've established a trading range, and what it does then is it sits and waits until we've broken above that range or broken below that range. If you have a feel for what's going to happen that day, if you're only waiting for the price to break higher, whether you can set that as well. In fact, I'll show you that at the moment. We've got Excel here, and all you need to do, you can scroll down here, you can see we've got some checkboxes. We can select long trades only, short trades only, and you can see that the capital graph adjusts in real time. Look at just long trades and just short trades. And if I select either one or the other, it means that the model will only take long or short trades. It's as simple as that. Plus, you can use it for backtesting as well, which we strongly recommend and are all in favor of, making the strategy as robust as possible.
Yep. Oh yeah, Mark. You were going to talk about the RSI a little bit, so I was kind of curious what you wanted to say. The information you had on that. So
okay, so the way I'm using RSI in here is to look to make sure the strategy. So we are hitting a new high or new low. Okay, so the price is, if we're hitting a new low, the price is likely to be somewhat oversold. If we're hitting a new high, it's likely to be somewhat overbought. However, we can use the RSI to make sure the market is not too oversold or too overbought. So we're trying to identify, okay, we've hit an extreme point, but we're still in a trading range. We haven't gone crazy. There isn't some crazy new news hitting the market that's just going to blast us to new highs or new lows. We want to be somewhat in a range, and that's what I'm using the RSI for. And there are full settings here. So going back to the model, you can use the RSI filter, so the RSI filter length rather here, and you can have a 14 period RSI. Let's zoom in on that for people watching. So pretty traditional RSI of 14. You can put the RSI way higher. You can put it up to 50, and with that, so we get no trades at all.
Yeah, you don't get any trades at 50.
So yeah, so which is not surprising. So an RSI of 50, which is for the RSI, it's a very long term, so it's not going to move very quickly. No trades were, if you imagine a long trades, no trades were higher than 50. So it's not hugely effective on this one, but if I bring it right down, bring it down to 10.
And I know a lot of
exactly what it's supposed to do. It's identifying the trades which are not totally overbought or oversold, and it is only taking those ones.
Yep. Yeah, I know a lot of day traders like to use the RSI 2, the 2 period, which it makes it a very responsive RSI. And
yeah, exactly. And you can do all of that with the click of a button, and you can see immediately that the capital graph adjusts in real time over here on the right of the model. So yes, we've got a very, very responsive RSI. So that would be a value of 0. You can see here, what I'm looking at here is this metric average trade size. You can see here, I'm trying to find the sweet spot. So
14 is pretty, that's how it was originally designed to be used. And
yeah,
that seems to work pretty well, the 14. But yeah, because
mm,
you were doing close to 80% with that one, right?
yeah, exactly. And yeah, so what I've also included is often when we're back testing, we like to be able to test the reverse of a particular condition. And it's so often the case that you understand more about a particular filter if you look at the reverse rather than if you look at the actual condition itself. So we've got that built in here with a drop down menu. So the RSI greater than, but we can also
Yep.
select here RSI less than, and we can
Yep.
get an example. I'm going to zoom into Excel again of what happens when we take the trades that are less than 10. So in this case, they're actually all on balance. They've got a
Hmm.
positive expectancy. Oops, not the right cell. On balance, they've got a positive expectancy. So you see here, these ones that are very, very oversold are performing less well. So just by
Yeah.
using the inverse condition, we can understand more about the filter.
Yeah, and you can learn a little bit about the market you're trading too. If it tends to get extremely oversold, it might continue to go lower.
Right,
It's
yeah. I mean, that's the thing, isn't it? That all of these markets have their own personalities. If we were just comparing our two favorites for a long, long time, the Nasdaq and the S&P, QQQ, the SPY, however you want to look at them, we know that the Nasdaq tends to overshoot more than the SPY. So we're going to
yes.
have slightly different settings. We can trade both of these markets in a similar way potentially, but we're
Yep.
going to have slightly different settings because Nasdaq will shoot through. It will be, people tend to get overexcited about it. Tech stocks bouncing one way or the other. We've seen that pretty clearly over the past year or so. In fact, probably the last
Yep.
20 plus years, really.
Yes.
But that's just, it seems to me to just be an underlying feature of these markets, and maybe one day it will change. But still, it seems the Nasdaq represents risk. Risk on
Yes.
tends to overshoot, tends to be momentum. S&P more conservative, tends to mean revert more.
Yeah, and that's a good thing to keep an eye on. So this actually can help you discover the type of market you're trading. If you have never traded like the euro before, you can play around with it and
Mm,
see how it does react over time.
yeah, yeah. We've done the euro actually a few weeks in a row, haven't we? But I'd
Yes.
like to go back to having a look at some of the Nasdaq, the S&P, and see,
Sure.
these
Yeah.
similar strategies. We can look at the opening range with both of those as well.
Hmm.
In fact, it doesn't have to be the opening range. We can identify the overnight range, for example. Opening range is just, it's as broad as we want to. We can set the exact time of day
Yep.
that we want
That
to
is
establish our range. And then as soon as we go above or below that range, we're into the trade.
And that's the beauty of using this Excel sheet is you can adjust these things however you want to adjust them.
Mm,
There's no limits. Like you're not stuck to or canned system. You can only work with certain parameters. You can literally change any of these to however you want it to be.
yeah, exactly. So full control for you as the user when you're using the Unity Excel trading model. You can do your back testing, you can understand the market, and then when you're ready, you can trade it live.
Yep.
So we've got a few other settings here. We've got our standard exit conditions here. We're using a time close. So we're trading here on the 1 minute time frame, and I'm using a 45-minute time close. So 45 bars. So the trade will stay open at maximum for 45 minutes.
Yeah, that's a more extended one. We usually I see we've been using the shorter like 15, 20 minute. Um, what made you go for the longer time, the 45-minute mark?
Yeah, in fact, I found that about 30 minutes when I looked at it earlier is producing a pretty good. Most of the gains are in that 30 minutes. It would be a
Hmm.
useful way to understand it. Sometimes you can extend the trades and get a slightly higher win rate, but for the extra amount of time that they're opening, so we're going from 30 to 45 minutes, we're open for an extra 50% of the time. We're only getting quite a small net gain. So there's probably a lot of logic to saying let's close the trades early, take most of the potential profit that's on offer from the entry signal that we had, and move on to the next one. So
Yep.
that's 30 minutes. Once again, you can see the results. Update in real time. If I said 20 minutes, we're actually getting an average trade size of 25 pips,
Yeah.
which is a large part of what we were getting before. So let me just zoom into that. And if I went all the way down to 10 minutes here, we're actually getting most of the gains from that first 10 minutes, which is interesting. So it's actually, to me, that's
Yeah.
confirming the entry condition trigger. I tested a few times actually in back testing this idea of making the trade justify its existence based on time. So we look at
Sure.
it over, if we're looking at the daily time frame, we'd look at it over 1 day, 2 days, 5 days, and analyze how much it was gaining for each of those days. And there is some sort of a curve. It's not going to usually be a bell curve. It's usually going to be a skewed curve. It's going to tail off, and somewhere to get, it depends on your aims as a trader. It's nice to shift that over to the left, like we were saying earlier. Take your profits for the trade. It's earned its profit, and just move on to the next one.
Absolutely. I absolutely agree with you on that one.
Yeah, so there we go. So 10, just on for 10 bars. What that means is that we're in the market much less as well. So we're less exposed to crazy moves. Sometimes crazy moves can work in our favor. Often seems to be the case that they work against us. And
Yes.
that's not just us, that seems to be most people.
Yeah.
We've all gained. We've all had big gains from trades that didn't deserve it, but some good news came in. But it seems that more often than not, when this news comes in, it would tend to work against us.
Yes. Absolutely happens all the time.
Mm.
So
So just one other thing, actually. This is one of our exit conditions. I won't dwell on this, but it's the strength close. And this simply means that I've tied it into the ATR. So if the trade has a single bar that's greater than the ATR, and the ATR is calculated on the average bar size, the average bar range, in fact, from high to low, it will close the trade. So this will exit the trade when conditions are in favor. And you can set this to a value of 2.
yep.
In fact, where it is, gone. Here we go. Set this to a value of 3. And you can see the results adjust in real time. Strength close seems to work with this type of strategy because we're looking for a quick bounce back. So we have an exuberant bar in the direction of our trade, then we're going to close it at that point, close it early. If not, we're using profit targets, and we're using stop losses as well.
Yeah, I've used that filter quite a bit. I like that one. It's a good one.
Yeah, nice and simple. No messing about. You just set a number, and once again, you can use the checkbox to switch it on and off. So please, if you're watching this live, please drop any comments or questions about the new strategies, about the model, anything you'd like to know. If you want to learn more, there is a link below this video. If you're watching it live or on catch up, if you get on the email list, you'll find out everything you need to know about getting started with Unity. We're offering a 2-week absolutely free trial of the full featured model. So if you go on there, you will find out exactly how that works. Absolutely no risk. Sign up, and you can be training this strategy today. Setup is very, very simple.
It is. It's very a couple of minutes to set it up, and there's no big install or anything like that. It's just very quick.
Yeah. All you need is this Excel model, which is a standard Excel model. You need the interface, which, as we've already said, doesn't need to be installed on your computer. You just run it whenever you need to. The whole system is very sleek and streamlined, and as soon as you are going, you can test all the markets. When I went through, if I go back to MT5, this will depend on your broker, but typically they offer a ton of different markets, or they are available. Everything here, we've got Brent crude, we've got crude oil, we've got copper. Coming all the way down here, we have got silver, we have got USDX, you're a GBP, and even coffee.
Yes, coffee. I haven't traded that in years. I mean, there was a long time ago I traded coffee,
There we
which
go. There's coffee. It's trading there on the 1 minute time frame. So you've got a bit of coffee related experience. Is that because of how much you enjoy drinking it, or
oh,
you just
I love
fancied it?
drinking coffee, but yeah, so trading, that was like a fun one for me to trade. I was trading soybeans about 20 years ago.
Yeah,
And I had picked up coffee as just a fun like side one.
yeah,
And yeah, and it's one of my favorite beverages. So yeah,
yeah,
it's a good one. It's a
yeah.
volatile market though, very difficult to trade.
Yeah, it's no not very smooth moves, is there? But there's one thing
Mm-mm.
about these commodities
Yeah,
is that there is some level of support and resistance. So they will trend from point to point, but they will also mean revert often over long periods of time, or at least on a seasonal basis. I can't say I trade
yes,
them myself, but I do find them interesting.
they are
Anyway, yeah,
very.
there's coffee. We've got stocks here, got Alphabet here.
Yeah, oh, wow.
So that's had a little bit of a sell off, like all the big FANG stocks have.
Yeah,
Got
and
a
it
few
hasn't
stocks.
bounced back.
We've got copper as well. I don't trade copper, but I do keep a weather eye on it because
Yep,
it's currently signaling, to me at least, a pretty optimistic view. It's up
yep.
nearly 30% from those lows in July, which is interesting.
Yeah, yeah, it's definitely a signal. It basically picked the bottom
Mm.
in July. The equity markets really didn't start settling down until December. So yeah, it kind of did lead the markets by like 6 months almost.
Yeah, interesting there. Yeah, so that was copper. It had a big sell off here, but as you say, it's picked the bottom better than the equity markets, and it's continuing
Hmm.
to press higher today, eyeing
Yep.
up those new highs, which would take it all the way back to June of last year.
Yeah, very
Okay,
impressive.
so Ren, I think we'll finish up today. I've really enjoyed looking at the new version of the model. Once
Yeah, me
again,
too.
email list below, hit the sign up button, and you'll find all about it. We're going to be doing another one of these next week. We're going to be doing more stuff. We're going to release some videos showing some of the analysis that we've been doing, some of the back tested analysis we've been doing. So stay tuned for that. Any final thoughts for today?
Well, I just want to say thanks, Mark. This is a really, really cool strategy, and I'm excited to put it to work. So, it's one of my favorites. I love RSI, and mean reversions are one of my favorite trades, but one of the scariest ones because I haven't had the discipline to be able to follow
Mm.
through with them successfully. So, I'm excited you did this work, and thanks again.
Okay, well, you're very welcome. Yeah, let's see how it goes. We'll have some more stuff to report, including some back-tested analysis. So please stay tuned for that. And Ren and I will be back next week, and I look forward to speaking with you soon.